Good morning, good afternoon, and good evening. It's November 11th, Singles Day and Veterans Day. To all the veteran listeners out there, happy Veterans Day.
Thank you for your service.
Thank you for your service. This is Mark Yu,
And Wawi Santos.
and welcome to the episode 62 of Mark Yu and Wawi Show. So, for just a disclosure, those who are not aware, me and Wawi are both physical therapists here in the USA with a passion and interest in investing our hard earned money in the stock market. So, on a weekly basis, we tackle through stock market sentiments and fund flows and some highlights of the overall US economy and the stock market. So, we're going to go right away, jump into to this week's sentiment of the American Association of Individual Investors. So, as of November 9th, so basically today, the stock market is open, but the bond markets are closed because of the Veterans Holiday. So, as of November 9th, bullish investors have become less from 30.6% last week. They dropped by 5 percentage points to 25.1, and there have been more bearish investors from 32.9, they went up to 47%. So those who have jumped on the bearish camp sure have missed the upside that we have experienced for the last couple of days, right, Wawi?
Yeah, these 2 days we have recovered our losses from last month.
Yes.
Just 2 days alone.
Quite a huge jump, especially yesterday. It was amazing when the government came out with a inflation report, which was a little less than what's expected. And I believe it's the lowest it has been since January of this year. So I think that boosted the investors' bullish spirit and the market overall. But
Exactly.
yeah, coming to mind, the survey, this American Association survey ended on 11/9. So probably they weren't able to more likely get what the sentiment was as of yesterday. But if you've turned bearish and bought some put options, it would have not been pretty for your portfolio. But if you have stayed long and trusted the companies and the believe in the long term, you have witnessed or you have experienced firsthand how the market can be generous in terms of its returns in just a matter of days. The fear and greed index, as we look at on a weekly basis, we are back on greed territory, contrary to what we have seen on the AAII sentiment just a few minutes ago. So, compared to a week ago, also we were at 58 points, greed territory still. So, now we have jumped by 8 points to 66 points, still on the greed territory. The market momentum, look at this. We are now on the positive territory again. For just because of the latest shoot up on the overall S&P 500, we are now trading above the 125-day moving average. So which is a little bit bullish. According to this sentiment right here, we're still at fear, trending at fear, but you can obviously see that we have pierced through that level multiple times. One, two, three, for the third time since the start of the year. Each time, though, we went up a little bit more, maybe 50 points more each time, and then resumed our downtrend, which is quite worrisome if we are still on a bear market. So there's no telling when we're gonna see a uptrend, a strong uptrend moving forward. But hopefully there's a big change this time around. What do you think, Wowie?
Well, except for the moving average, the 200-day moving average, where you know we have green on all moving averages.
Mm-hmm.
So the 5-day, 10-day, 20, 50, and 100-day, it just went shooting up this past 2 days. So, but we still haven't like surpassed our uh moving average for the 200-day. But still,
Right.
that this is a great relief for those that are patiently waiting for a rotation.
Mm-hmm. So some positive signs. The McClellan Volume Submission Index, which kind of tracks the market breadth, it indicates if more people are getting in the market, or actively buying and selling stocks, has been trending up as well. So there's involvement. There is some gravity behind these moves for sure.
Yeah, strong RSI lately for the S&P 500 up 61.95 points.
Mm-hmm.
Didn't hit the 70-point mark yet, but still that's a very strong, short-term indicator.
Yeah, for those who aren't aware, RSI indicates the momentum, right, Wawi?
Yes, the
Of the
momentum, the
overall. Mhm.
relative strength index of
Yep.
that
If
technical movement.
yeah, if the index hits 30, most likely it's on the down end and oversold. And if it hits 70, right, Wawi, that's a higher end.
Yeah, that's a higher end that,
That
go
means that
buy.
the company or the stock or the index itself is overbought. So for the put and call options market, there's a slow decline, but still a little bit elevated. So these must be the overall bear investors out there that believes that the stock market has further to drop. So again, it's still now reflecting greed territory, but it's still elevated compared to its long-term average. The volatility index have dropped significantly, like what Huawei has pointed out on our messenger group for the past couple of days, meaning that the overall stock market is not um quite volatile. On contrary though, Huawei, I would think it's the market is actually volatile,
Yeah, I
even
still
more
think it's
volatile.
volatile. Yeah.
That
This
the
past 2 days is just a relief. So we're still, somewhat, prudent to wait, for further rate hikes and what future CPIs are gonna hold.
Yeah, I don't think the volatility index is capturing the volatility anymore. We need a better gauge. More people, I believe, are betting more into put and options or splitting their money between that and other stuff.
Well, there's some good signals coming from the housing market and as well as the used car market. There's a trending down of interest rates as well. So very good signals lately.
Mm-hmm. Some fundamental gravity, as one way, as I would put it. So the S&P 500, it's up 5.6% for the past 5 days. And if you're just going to look at the jump that it did post CPI report or consumer price index report yesterday, which beat expectations, we're up 6.5% since yesterday morning. So that's quite a huge jump, which could easily also be easily erased if the overall market sentiment changes.
Exactly, and that's what we've seen this recent 2 quarters.
Yep, anything can go. And since the start of the year, everything has been falling down. Um, yeah, but if you're a long-term investor, Iron Wowie, we really recommend for you to stay put in the market. Pay attention to the company's quarterly reports if they're otherwise, really looking at their numbers and generating profits. They're growing profits. Because whatever happens, the company will still be there regardless what the overall economy situation is, whether it's recession or, whatever. If they can still fund their debt and grow their business. Yep.
Exactly.
For the past week, wow, look at this. Wow, the best performing industry is technology.
Yeah,
Yay.
that's the rotation that I was waiting for.
Mhm. Technology, believe it or not, it's been quite a strong comeback for the
Mhm.
past 5 days, especially yesterday when I saw, I think, well, even today, I think Lyft, one of the ride hailing companies, is up 14, 13%.
Well, that's
Um,
good.
the thing is, although everything is up in technology, Google, I think it's still quite underappreciated at this point in time. I think it's priced less than $100. Believe it or not, this cash flow giant is still $96 a share. Whereas just a few days ago it was $87. So Google, my bias is it's still gonna be generating a lot of cash flow. I have investments on it. I believe the company will be around years and decades from now. So,
Well, the same goes with Meta platforms, I would say.
mhm.
Um,
I think Meta staged a huge comeback too, right, Wawi?
I didn't check, but let me see.
Yep, yep. I got it pulled up right now. Meta Platforms, since it started their announcement of layoffs last
Mhm,
weekend, their share is up. Their stock price is up 19%.
mhm.
19%. Well, for the past 5 days. So, but nonetheless, like me and Wawi spoke about last episode, it has to go up by 400 or 300% just to get to break even mark after their huge drop for the past year. They're still down 70% despite their recent uptrend. So, still ways to go if you're a long time believer in meta platforms. I myself, I don't longer believe in the metaverse thing, and hopefully somebody would tell Zuckerberg to stop wasting money on it. But we'll see how it goes.
Yeah, he's putting a lot of money into that.
Yep, burning billions and dollars and billions and dollars, $10 billion in a certain time period. I think since the start of the year. Speaking of billions of dollars, probably everybody is aware by now that one of the largest cryptocurrency exchanges out there was looking for $8 billion to save them. Any money who could donate at least 8 billion would float this company. But
FTX.
yeah, FTX. But to their sad disappointment, nobody was able to fund their excess leverage accounts, resulting into finally themselves filing into bankruptcy. So we're gonna tackle that in a second. It was valued, the FTX cryptocurrency exchange, I think, was valued about $32 billion at one point after they raised a lot of money from investors, including the world famous football player, quarterback, Tom Brady, and his once wife, now ex wife, Giselle. I think both of the partners invested roughly around more than $600 million into this scam or now bankrupt cryptocurrency exchange.
Mhm.
So, yep. So, technology, communication services, best performing, basic materials. Actually, each and every sector performed very well within the past 5 days. And look at this, Huawei. For the past 4 weeks, each and every sector are in the green.
Mhm.
I didn't feel that in my portfolio, but it looks like each and every sector are in the green. Wow.
Yeah, even the retail sector
Mm-hmm.
moved up yesterday.
Yep. And since the start of the year, only one sector, well, two sectors now. Energy with only one sector, sorry about that. Since the
Mhm.
start of the year is in the green. Only energy still.
Yes,
Technology is
only
still down
energy.
29% since the start of the year. So, nothing new about that. Oh, so this is the other thing. So, FTX was looking for a lifeline, $8 billion worth of lifeline. Whoever can throw that money would surely be greatly indebted with FTX in order for them to survive. But nonetheless, they reach out to Binance. Binance actually came out with a report that they accepted um, that they might consider investing, but it was a non-binding agreement. They have to look at the FTX books and then came up with a yes or no. But after taking a look at its books, it looks like it's too much for them to save, too much, or it's either too much or maybe they don't themselves even have that amount of money. So Binance ended up calling it quits, thus leaving FTX to float on its own. If I'm not mistaken, Huawei, it was rumored over the weekend. It was actually Binance CEO himself who tweeted that he's gonna start pulling $400 million out of FTX over the weekend. So he was actually the first one to light the candle and ignite the panic. the bank run that had happened on FTX. And then next thing you know, Monday came, $5 billion worth of money are being withdrawn. And obviously, FTX is not liquid. They don't have that amount of cash floating around, which they should have been, and thus resulting into a bank run. And now we're left at this point, Friday, 4 days later, they have to file for bankruptcy or face further charges. What I've researched on this, Huawei, is FTX have another company that they have in business with, the Alameda Research or something like that, somewhere in the Bahamas, somewhere out there. FTX themselves, their headquarters in Bahamas too. So technically, they have $18 billion in assets. And what this guy did, Sam Bankrupt Fried, I think.
Bankman-Fried.
Bankman-Fried throw or put or withdraw customer assets. They had 18 billion in assets, customer assets, deposits. He took 10 billion of the customers' assets and put it on Alameda's balance sheet, and then had Alameda bought more FTT coins. So they kind of like use customer assets without their knowledge, investing it into other stuff, mainly their own token, which is doesn't have any value in it. So that's resulting into a fall, a deep fall. So this CEO for sure and founder will, once hailed as the JP Morgan of the cryptocurrency world, will definitely face charges against the feds and more likely face trial in the near future. What's interesting in this snapshot though, Huawei, is that Binance supposed to be the last resort, but this just came out that their reserves themselves, almost half of it, are in its own tokens. So this sounds very familiar. It's FTX part 2.0. So it's only a matter of time again when the investors start panicking and withdraw and cause another drop in this cryptocurrency. So
They're
not
trying to create their own market beyond SEC regulations, and that's what some investors are looking for, is more centralized regulation to protect consumers
Yep.
from these currency exchanges.
Yep.
But some proponents of the cryptocurrency market does not like the
Yep.
regulation, so that's a constant debate. But I think protecting customers should be number one. The way I look at cryptocurrency is, as long as it's tied to a currency like the US dollar and regulated by the SEC, I think it will offer reduced risk for investors. Unfortunately, right now, we have a lot of exchanges that and companies that have adopted these blockchain cryptocurrencies on their books and putting some risk to their investors. And that would be like similar to what Tesla did.
Yep.
But we will see. Regulation is needed.
Yep. It's going to be a hard sell nowadays for sure because they have messed it up big time. As one of the very strong proponents, he's even a big political donor to the Democrats heading into the recent election, getting all those backing politically and through SEC. So now that the reputation has been definitely tarnished, it's going to be a quite hard sell along with all those decentralized proponents of the cryptocurrency. So one thing I would like to highlight, as you've mentioned, Huawei, that it could also affect some of the equities investments, just because the CEO himself bought nearly 8% stake in Robinhood. So I don't think Robinhood denies that they have no exposure to FTX. So they have no direct exposure. So I don't know what direct means. Maybe there's an indirect exposure. So we'll find out pretty soon once these there's a famous Warren Buffett quote, and when the tide recedes, when you see those swimming naked. So
Mhm.
we'll see much more of these episodes come soon. So
Things
another.
will definitely unfold.
Mhm. Now that the federal is involved in investigation. So another record, stock market record. So this is not so like often observed in a bear market. I would say because Apple just recorded a new stock market record. It had surged 191 billion in one day. This was
Amazing.
yesterday. Yeah,
Mhm.
191 billion. So that's
I think
more of
it's
a.
first time ever.
Mhm. Oh, they beat Amazon actually. They beat Amazon's 190.8 billion gain in February.
Exactly.
So
Very strong. Very strong
mhm.
move by Apple.
Now that brings into mind like the sell-off actually started since December, and we've been bouncing up and then down more often. So it's still quite a task to see whether this is the turning point eventually. Because for all we know, Apple's the biggest stock in the stock market. So if the sentiment returns, people think the consumer inflation is over, Federal Reserve might slow down later on, and so we'll see. But if you're gonna look at this chart itself, the big surge, which end up Apple retaining a $2.3 trillion value, which is quite a ways off from where it was, nearly $3 trillion back in January. So long ways to go. And for those who are shorting this market, it might have been a very unpleasant return for past couple days because we just posted the biggest rally in the most shorted stocks since March 2020. So those who were not able to get out of the market yesterday or close their short positions got screwed big time because of the big green wave, green candles all over the place.
And for
So,
those that kept investing during the downtrend,
mhm.
congratulations to them for
Yes,
their
sir.
short-term gains.
Congratulations to us, guys. little wins, little wins. It's the time in the market rather than timing the market. So one would say. So these are just covers I saw on Twitter. So be wary if you start seeing these guys. Some people being posted on famous newspapers. Just keep an eye out. You don't want to be falling heads over heels on the latest trend if you start seeing these type of publications. So one is on Fortune, referring to Sam Bankman-Fried as the next Warren Buffett. The
Oh
next
my.
Steve Jobs, on the Theranos, Elizabeth Holmes, now facing jail time. The king of SPACs, Chamath Palihapitiya, but I think this guy really plays his cards really close to his own. So he, you know, among these four, he's the only one who was able to avoid jail time. Hedge fund Gadfly turns biotech entrepreneur. This is the guy who pumped up the prices on certain medication by a thousandfold and faced trial and ended up in jail as well. So yep, going back, U.S. inflation cools down to the lowest level since January, according to this Financial Times article. So 7.7, it's still pretty high, right, Wawi? It's not even like on the Federal Reserve target.
No, 5% is what they're looking for in the short term.
Yep, it's still elevated. So year over year, each and every item on this consumer price index basket is still up 7.7%. Highest of which is energy, obviously, oil, 17.6%. Gasoline is up, almost the same. Medical care services, 5.4. Used car and trucks has slowly declined, 2% now. So for those who have been wanting to buy a second-hand car or brand new cars, time is close where we might see some sort of let up in that aspect in that market.
So for a personal experience, we're waiting for a Hyundai brand car, and our dealer said that we have to wait another 5 months.
Really?
And the same with a Kia
Mm.
SUV that we're also waiting for. Another 5 months of waiting.
This is because they don't have them in inventory?
Um, because I think they're just waiting for new shipments. We're trying to get it MSRP.
Oh, okay.
So right now we don't want to pay the current price for a new vehicle.
Mm-hmm. So wait for 5 months until prices go down a little bit?
Yes, that's what I'm saying.
Wow. That's pretty good advice right there. So here's the media stocks as of yesterday. They have retreated far more than the S&P 500. Warner Brothers, which is a spin-off from AT&T, this owns the HBO franchise, Game of Thrones, House of Dragons. If anything that sounds familiar, this is the company who owns it and produces it. They're down 61%. Wow, I didn't even realize how low they are. Netflix is down 58%, nothing new. Paramount is down nearly half. Disney is down 44. Comcast is down 38. It's not been a pretty year for publishers or producers, media conglomerates.
I still like Netflix and Disney. Um, you know, Disney, I think, and Netflix are good companies, but that's my opinion. Um,
Mhm. I also
so
have Disney in my portfolio, and we're gonna take a look at its earnings come in a few seconds. Just so I think they just came out with their earnings, right, Maui?
yes, I believe so. They're
Yesterday.
on a hiring freeze as well.
Yeah, I saw that too. I think that's a new trend now. Whoever comes out with an announcement that they're gonna fire workers or hiring freeze will get a reward in their stock price. So everybody is jumping on that wagon after Elon Musk announced that he's gonna lay off 50% of Twitter staff. So 2022 tech layoffs. Speaking of layoffs, for those who are tuning into our YouTube channel, you can definitely see numerous big tech companies, hundreds of billions of dollars in market cap, announcing um, layoff coming soon. So Walt Disney, $95 a share. I believe this was as high as 160 at one point. Yep, within the past year. Now they're clearly down little close to half. Price to earnings ratio forward is 20.9 times earnings. The market capitalization of this company is $158 billion. So, like you said, Huawei Disney is planning targeted hiring freeze and some cuts. Um, so they actually fell 8% their stock when they came out with their earnings report back on Tuesday. So 7% as media side profits. Subscribers topped forecasts. So if we're going to take a look at their release. So their revenue actually increased by 8.7% year on year to $20 billion. Nonetheless, they missed Wall Street estimates. So trying to see if I can find their balance sheet here. So earnings. Okay, now let's take a look at the quarterly figure. So 9% rise in revenue. And if we're going to take a look at their profits rose by 1% to $162 million. And their free cash flow dropped by 10% to $1.37 billion. So we're just going to take a look at their media entertainment. Their media and entertainment interestingly dropped by 3%. The one that brought them more business is their parks and experience. It's up 36% or nearly $2.5 billion. So
It
it
may be a seasonal effect as well.
summertime.
For this time of the year.
Yeah. So this isn't their October quarter, so that would be June, July, September, October, August, September, October. Yeah, August, September, October. Those months. But yeah, it's their parks that saved them. $1.5 billion in profits. But if you take a look at their media, their movie and subscription and stuff business, they barely generated any profit. From $947 million, It's down 91% to $83 million. A few more mistakes, they would have generated losses in that aspect. So it has not been a pretty sight for
Well,
their
one thing I've
media
been
bit.
noticing with a lot of these companies is they're laying off a lot of their communications people. Just look at what happened to Twitter when Elon Musk took over.
Mm,
So it just depends on who they're laying off. So the people that pushes, what's new about the company and communicates to consumers, is critical when you're trying to get revenue.
yeah,
Um,
I
but
agree.
unfortunately, those so-called marketing staff are being laid off
Yep.
from
They're
these
not the
companies.
most stable jobs at this point in time. Yep. And we're gonna take a look at the balance sheet. Cash for Disney is down 4 billion to 11.6 billion dollars in cash, while they have 3 plus 45.3 billion. Oh wow. 48.8 billion dollars in debt. So that's quite a huge amount of debt, but I believe, Disney has a lot of magic up its sleeves. It has the mouse, so never underestimate the mouse. So this is another article. Like if you go to a Financial Times website, all they were publishing all day long is about this guy. So his face is all over the place, as you could also tell with our cover on this episode. So he's very much trending for all the wrong reasons. At one point, that was shared in a Bloomberg article, I think, that they have had trouble finding this guy, and they were almost missed one of the October payrolls because of him not acknowledging where he was, or not answering to calls. So definitely some red flags over there once your CEO is gone missing.
Well,
So
it's just like what Do Kwon did
mhm.
with his company. He went fugitive and went hiding.
Yep. Do Kwon. I think now he's like in the, what do you call that? Interpol list, most wanted. But he's
Mhm.
still appearing in what do you call those? Zoom calls. He's
Oh,
still being a
really?
special guest. Yeah, I saw his face interacting with some of the people there at the cryptocurrency land. I think they still hail him as one of the best whatever, maker of tokens. So another Bloomberg article, it says it's all gone. FTX bankruptcy has retail traders bracing for losses. So another painful lesson to those who haven't bought this fraudulent company or promises. So it says here, this is going back to real estate. If you want to take if you want to know the latest real estate trends, you might want to go back to our previous episode. Me and Wawi uh, discuss on episode 61 in depthly or what's happening to the real estate market. So this is a Bloomberg article that just was published today, this morning. It's the worst time to buy a home in a generation, US survey shows. So this is the weakest home buying conditions on record. We are now at the highest interest rate level in the past 40 years. So unless you really need to buy a house right now to move in because of a bigger family or because of a situational case, there's no excuse to postpone your home buying, but definitely not the best time. And another update, our ARKK short sellers Kathy Wood suffer $180 million hit as ARK investments, ARK ETF surged the most on record. Wow. They surged 15%
Oh, wow. I didn't catch that.
for the best day on record. Can you believe that, Wowie? They're still alive.
Yeah, well, they've been down very much for the whole
Yep,
year.
still down
Yeah,
75%. But look at that, the best on record. Oh my.
amazing, amazing, amazing movement.
Yep. So just timely, this was just published. Fund flows, as we take a look at on a weekly basis. Global equity, global stock funds register outflows after 2 weeks of net buying. Wow. So actually, investors globally sold their stock investments. Money leaves stocks for the first time in the past 4 weeks. So not in a timely manner because we just experienced a big surge. Those who have sold have missed out one of the best performance, well, actually the best return in the past 2 years. So somebody has to pay up on those
Need to
misses.
find out where that's going.
They surely have missed this quite a run up. So 30-year fix, they're close today actually. So this has not been updated to today, but as of yesterday, we have pierced down the 7% mark. We are now down to 6.62% for the 30-year mortgage compared to 7.2%. That's a huge 60 basis point drop day before, just before the CPI release. So, yep. What a ride
That's good
this week.
news. Good news so far for us investors.
Yep. For those who are eager to buy their homes, but just remember that survey that just came out. Worst time to buy a home in the past 40 years.
Just wait a while.
Alrighty. So I hope everybody had a good week so far. For us healthcare workers, I guess. Well, we've been busy, right?
Yes, very busy. Yeah.
Yeah.
So that's one thing that's good. Our jobs are still stable at this point.
Yep, healthcare definitely has been relatively a stable job. So I guess we finished right on the dot, Wawi.
Amazing.
Well,
Episode 62, guys.
Episode 62.
Like and subscribe.
Thank you guys for listening, tuning in, and hopefully you guys stay tuned for next week. We'll see moving forward because shortly thereafter, me and Wawi will be taking some trips out of town. I myself will be out vacationing somewhere in the Philippines, so it's been a while.
Yes.
I miss my family over there, so yep. Hopefully you guys have a good weekend.
Going home.
Yep. And again, this is Mark Yu signing out.
Wawi Santos signing out.
Thank you guys.